In 1929, the stock market crash wiped out fortunes and plunged the world into the Great Depression. Today, the same warning signs are flashing bright red, but this time they're supercharged by a mountain of global debt that has spiraled to the levels that are hard to even comprehend. I mean, we aren't just facing another recession, we're staring down the barrel of the everything crash, and the fallout could make the 1930s look like a dress rehearsal. So for decades, the crash of 1929 has been our nightmare scenario for financial catastrophe. It was a crisis that didn't just break the market, it broke society. It led to mass unemployment, poverty on a scale that's hard to imagine, and a surge of political extremism that set the stage for World War II. The world swore it would never happen again. What if the next crash is already here? Lurking just beneath the surface, what if the very same triggers from the history books are lining up with a set of modern dangers so immense they dwarf anything we've seen before? So in this video, I'm not just going to glance at the charts, we're going to connect the dots between the past and the present. I'll uncover the shocking data showing how the triggers of past meltdowns aren't just back, they are now amplified by unprecedented global debt and simmering geopolitical turmoil. We'll explore the frighteningly fragile state of our interconnected worlds and reveal the political and social chaos that could follow a collapse, worse than the Great Depression. And this isn't just about speculation, it's a warning based on hard evidence, and understanding it is the first step to navigating what's coming. So to really get the scale of the danger we face today, we have to go back to the day the world broke, the 1920s. A lot like our recent past, were a time of wild optimism. The roaring 20s were just used by new tech, easy credit, and belief that the stock market was a one-way ticket to riches. Ordinary people armed with borrowed money piled into the market, buying stocks on margin. In a frenzy of speculation, the market became a national obsession, totally detached from the real economy. Thus came Black Tuesday. On October 29, 1929, the illusion shattered, panic selling triggered a collapse that vaporized billions in wealth almost overnight. But the crash wasn't the whole story, it was just a spark that lit a tinderbox of economic vulnerabilities. The banking system, which had invested heavily in the bubble, was a house of cards. As the market imploded, a wave of bank failures swept the nation. Between 1929 and 1933, over 9,000 banks in the United States, more than a third of the nation's total, vanished, taking the life savings of millions with them. Consumer confidence evaporated, people stopped spending, businesses failed, and a vicious cycle of layoffs began. At its peak, unemployment in the US hit a staggering 25%. 1 in 4 working-age adults had no job. Industrial production fell by nearly half from 1929 to 1933. The US economy effectively shrank by 30%. People lost their homes, their farms, and their dignity. Breadlines and shantytowns, nicknamed Hoover Wheels, became a defining image of the American landscape. What turned a bad recession into a Great Depression were disastrous policy moves. Instead of stimulating the economy, the government tightened its belt. And crucially, in 1930, the United States passed the Smoot-Hawley Tariff Act, a protectionist bomb that jacked up taxes on imported goods. The idea was to protect American industry, but the result was a global trade war. Other countries hit back with their own tariffs, and international trade collapsed, falling by more than 50%. This act of economic self-destruction choked global commerce and pushed the world into a deflationary death spiral that took over a decade to escape. The ghost of 1929 is a chilling reminder of how fast prosperity can turn to ruin, and how speculation, systemic weakness, and terrible policy can create a perfect storm. Now let's bring it to today. The common refrain you hear is, we learned from our lesson from 1929. We have stronger institutions, better policies, and social safety nets. And while that's partly true, it's a dangerously incomplete picture. The financial world of 1929 was a pond compared to the vast, interconnected, and turbulent ocean of today's global economy. The trigger of the past haven't just returned, they've mutated and are now amplified by 3 forces that create a scenario far more perilous than anything our grandparents faced. A data tsunami of debt, geopolitical wildcards, and a social powder keg waiting for a match. So the single most dangerous amplifier in our modern economy is debt. After the 2008 financial crisis, which was itself caused by too much leverage in housing, the world's solution wasn't to cut back on debt, but to move it around and create a whole lot more of it. Central banks everywhere slashed interest rates to near zero and pumped trillions of dollars into the system. This era of free money was meant to spark growth, but it also fueled an unprecedented global borrowing binge. Today we're living on mountains of debt so enormous it's difficult the process. As of late 2025, total global debt has surged to over $337 trillion. The global debt to GDP ratio stands at a staggering 235%. To put that into perspective, global government debt alone hit nearly $111 trillion in 2025, an astronomical sum. Let that sink in. We have borrowed vastly more money than the entire world economy can produce in a year. Advanced economies are swimming in it. The United States government debt to GDP ratio is hovering around 125%, while Japan is an eye-watering 230%. These aren't just abstract numbers, this debt makes the entire global financial system incredibly fragile. For over a decade, this mountain was manageable because the cost of borrowing was practically zero. But now, in a desperate fight against inflation, central banks have been forced to hike interest rates, suddenly serving that colossal debt is becoming crushingly expensive for governments, corporations, and families. Sure, they are lowering it somewhat now, and in 2008 the crisis was triggered by leverage in one specific area, subprime mortgages. Today the leverage is everywhere. It's an everything bubble. We have a corporate debt bubble, a government debt bubble, and in many places a renewed housing bubble. The International Monetary Fund itself was warned that public debt levels are deeply troubling. This mountain of debt is the primary accelerant. It ensures that when the next crisis hits, it won't be contained. It will be a systemic global event and everything crash, where all assets classes could fall at once because they're all propped up by the same shaky foundation of unsustainable debt. This unprecedented debt bomb is sitting in a world that is arguably more volatile and fragmented than any time since the 1930s. As of late 2025, there are well over 100 armed conflicts taking place worldwide, major power competition between the US and China, the war in Ukraine, and the relentless turmoil in the Middle East aren't just background noises, they're active disruptors of the global economy. Old alliances are fracturing and sanctions and tariffs are being used as weapons, changing the very rules of global business. This is a critical difference between the past. In 1925, the disastrous smooth holiday tariff was the reaction to an existing crisis, a misguided attempt at protectionism that made a bad situation infinitely worse. Today, the trade wars are happening before the crash. Aggressive tariffs and economic nationalism aren't a response to collapse, but a contributing cause of the instability that could trigger one. We saw a preview of this in the early 2025, when new US tariffs policies triggered a sharp, though temporary, global stock market crash, showing just how sensitive the market is to these shocks. Our world is built on a complex just-in-time global supply chain. This was once seen as a source of strength and efficiency. Today it's a profound vulnerability. A conflict in one region can halt the production of a critical parts, causing factory shutdowns and empty shelves thousands of miles away. Tensions in the South China Sea could disrupt a huge portion of global shipping overnight. The weaponizing of trade, energy, and finance means the global economy is now a battleground. Each of these geopolitical flashpoints is a potential trigger, a spark that could ignite the depth-laden kindling we've just discussed. A major crisis in Europe or Asia would be almost impossible for Washington to ignore, potentially dragging the world's major economies' power into a vortex of conflict and economic collapse. The final and perhaps the most terrifying amplifier is the state of society itself. An economic crash on this scale is never just about money. It's a societal event that rips through the fabric of everyday life. The Great Depression brought unimaginable human suffering. Besides mass unemployment and poverty, it led to a rise in crime, malnutrition, and alcoholism as people grew desperate. It shattered families and broke people's trust in the system, in their government, in the banks, and in the promise of a better future. This loss of trust is what creates a social powder keg. Economic crises breed political extremism. The devastation of the 1930s directly fueled the rise of populist, nationalist, and authoritarian regimes around the world, including in Germany, ultimately leading to the World War II. The 2008 crisis, though less severe, gave us a glimpse of this. It sparked a protest movement like Occupy Wall Street and undeniably fed into the deep political polarization and rise of populist leaders that had defined the last decade. Now imagine a crash worse than 1929. The social consequences would be catastrophic. We would see unemployment levels that dwarfed the 25% peak at the Great Depression, leading to a widespread poverty and social unrest on a scale not seen in modern times. Vulnerable populations would be hit first and hardest, making already deep inequalities even worse. But the political fallout is the greatest long-term threat. In a world with already low trust in institutions, a complete economic meltdown could shatter what little faith remains. This is a fertile ground for extremism movements, for for scapegoating and for authoritarian leaders who promise easy answers to hard problems. A world grappling with a new Great Depression would likely turn inward, embracing nationalism and protectionism and dismantling the global cooperation we need to solve the crisis. The social and political chaos could be far more damaging and long-lasting than the economic destruction itself. So with this grim picture painted, the immediate question is, what's the solution? What can we do? If you're looking for a simple answer or a magic portfolio that will be immune to a crisis of this size, you're going to be disappointed. When the very foundation of the global financial system is compromised, traditional financial advice takes a back seat. The first most critical step is awareness. The greatest danger we face isn't the crash itself, but the ignorance and complacency that will allow it to catch millions of people completely by surprise. Ignoring these massive flashing red signs, the mountain of debt, the geopolitical fractures, the social fragility is the single most dangerous thing anyone can do right now. We're being told that every dip is a buying opportunity and that central banks can always save the day. But the tools they use to fight the 2008 financial crisis are not what they once were. After years of near zero interest rates created this mess, their ability to stimulate the economy is severely limited. We're flying with a much smaller safety net. And I mean, this isn't about spreading fear, it's about empowerment through knowledge. By understanding the immense forces at play, you can start to think critically for yourself. You can begin to assess the real risk in your own life, your community, and the world. You can spot the difference between mainstream narratives designed to keep everyone calm and the underlying data that tells a very different story. Awareness allows you to move from being a passive victim of circumstances to an active, informed observer who is prepared for a wide range of outcomes. Everything is developing so fast, and staying informed is your best defense. And if you want to stay ahead of these trends and get ongoing reality-based analysis of the global economy, make sure you subscribe and click the notification bell. And please share this video. It's vital that this conversation moves beyond the niche corners of the financial world and into the public square. And with that, thank you for watching, and I'll see you guys in the next video.